Welcome everybody. Thanks for joining us today. My name is Mark Noonan and I lead the tax practice for Deloitte in Ontario, and we're very happy to have you here today. I'm reporting from downtown Ottawa, right across from Parliament Hill on Budget Day 2015. I'm joined here with two of my partners. To my left is David Mason, one of my partners from Ottawa, and to my right, Albert Baker, who leads our government policy practice, a partner from Toronto as well. And both have been in budget lockup all day and are just returning and are eager to share with us their findings from this year's budget. David, I'm going to turn to you first off and ask for your input. I think going into this year, in an election year, I think we all expected to see a balanced budget or a surplus budget. So David, anything in the budget that you were surprised about? Anything in there that you weren't expecting to see?
Well, Mark, it was an interesting budget. We did expect to see a balanced budget. They've been telegraphing that for the past couple of budgets, that they were aiming to get to a balanced budget. So this was the year they predicted, and this was the year they got to it. But the other thing about this budget, there were several other things that they telegraphed to us in advance as well. They talked about changes to the TFSA, so that wasn't a surprise. They talked about changes to RIF. That wasn't a surprise. The couple of things that did surprise me, there was a change to the small business tax rate, so that was reduced, and I wasn't really expecting that. The other thing was there were a number of changes where they seemed to be really trying to reduce the compliance that people are facing in terms of dealing with their taxes.
Thank you, David. Yeah, I mean, tax breaks for small business, what's not to like about that? I think that's going to be very well received. Switching gears a little bit and moving over to Albert. Albert, in your reading of the budget today and your time spent in there, what is your take on big business and the impact on big business?
Well, the government reaffirmed their support of the OECD G20 BEPS project, which will ultimately lead to recommendations that will curtail international tax planning. But there were no new measures that were announced. And so that's a positive development in that some countries are getting ahead of themselves and introducing new measures and not waiting for the recommendations from the OECD. So it's positive that Canada is not doing that. They're going to wait for the recommendations. In terms of other changes for business, as David mentioned before, that we're seeing a reduction of the small business rate. And that's going to go from 11% down to 9% over time. So that's also welcomed by small business. There's also a new program, an accelerated depreciation capital cost allowance for the manufacturing assets. There's going to be a 50% write-off on a declining balance and under the new regime, and it's replacing an existing regime that's expiring this year that had a 50% declining balance on a straight line basis. Another significant change is around foreign employers. And so right now there's been a measure whereby foreign employers have employees with Canadian business days. They've been subject to withholding tax in regard to that. Now there's a new measure under which if those employees are exempt from tax under treaty and they haven't been in Canada for more than 90 days, then they're not going to have, their employer is not going to have to do the withholding. And another change is in the financial sector, and there we're seeing some new anti-avoidance measures that are being introduced. First, in regard to an expansion of the anti-avoidance rules dealing with dividend rentals, and also an expansion of the anti-avoidance rules dealing with captive insurance companies.
Thanks. That's a big one on the cross-border employees. I know we have a lot of clients and companies that are moving employees across the border all the time, and it's such a global workforce. I think that'll be a real big benefit.
Absolutely. In our pre-budget submission, that was one of the changes that we asked for from the government, and as part of their reduction of red tape initiative, and they delivered.
Oh, good stuff. So let's switch gears a little bit, and I'll turn back over to David. I think most people obviously pay personal income tax. Were there any goodies in there for the individuals? What can we expect in an election year? Anything?
Well, there were some goodies. So for people who are wanting to save money, there was some additional help for those people. So the tax-free savings account right now is sitting at $5,500 that you can put into a tax-free saving account every year. That has been increased for this year up to $10,000. So that means you won't have to pay tax on the money that you put into those plans on the investment income that you earn. Also, with respect to, and this will help seniors, the money that you have to take out of your retirement savings plans when you turn 71, that has gone down. So previously you had to take out a little over 7% and then that grew all the way up to 20% when you turn 94. Now what they've done is reduce that, so you actually only have to take out 5%, or a little over 5% in the first year, and then gradually going up to 20% by the time you turn 94. So this will allow people to leave money into their savings plan longer. It will help them to be able to support their lifestyle longer as they go into retirement. And we know people are living longer, so this will help those people. The other change that was made was that for people who own farming or fishing businesses, they've increased the amount that you can get tax-free in terms of a gain. Up to $1 million. So it was sitting at $813,000. Now it's moved up to $1 million. You can get that tax-free whether you sell to somebody outside or if you sell to your family members. So that's a great help for those people who own those kind of businesses.
So more money into TFSAs and required to take less money out of RIFs. So
That's
that's
right.
got to be good for elderly people that are planning
It's
for
good
retirement.
for senior people, and it's good for the economy because, and one of the things Deloitte has pointed out in our productivity documents is that we really need to encourage saving, and this is a way to help people save where they don't have the tax hit on the amount that they put into that. So this is good news all around.
Well, thanks a lot, David. So we've heard some good stuff in the budget for individuals, for corporations, which is what we'd like to see. Anything, I'll turn over to you, Albert, for some closing comments. Anything from this year's budget maybe that you would have liked to have seen that wasn't there?
So from a competitiveness and a financing perspective, more could have been done relative to the knowledge sector and in trying to incent the knowledge sector. Some of the areas where we think the government should consider would include the introduction of an angel tax credit in regard to venture type investments. Also expanding the refundability of the R&D tax credits and consideration of a patent box, which we're seeing a number of them around the world now. It's really there to incent the commercialization of intellectual property. On the personal tax front, relative to our foreign peers, that we hit a top rate of tax at a relatively low threshold of income, and so we think that threshold should be increased in Canada as well. Overall, this was a fiscally responsible budget and no huge surprises.
Thanks, Albert, and thank you all for joining. That brings to a conclusion our coverage of Budget 2015. I want to once again thank my colleagues. To my left, David Mason, and to my right, Albert Baker. We've had a very long day being locked up all day, and we really do appreciate them spending the time with us. For more in-depth coverage of our budget, please go to our website, www.deloitte.ca. We have a full analysis. We look forward to seeing you all back here next year for Budget 2016.